Hi, welcome to my market report. My name is Mike, and my market report is about mortgage rates. We kind of get into what's going on a daily basis. We kind of what impacts whether if it's a economic report or headline news that's impacting the markets, and give you kind of trend or insight as to what's going to probably happen during the week and short term and long term. We don't get so much into rate quotes primarily because there's just too many variables that go into a rate what goes into interest rate as well as different loan programs out there. That would be kind of a whole other video out there. So we kind of like to get into more if it's going up or down or sideways pattern by looking at the mortgage-backed securities, which is what drives mortgage rates, and kind of show you on a graph as to the trend and where they're moving towards. If you guys would like a rate quote, please feel free to reach out. A little bit about myself: I am a loan officer, so I am licensed to be able to provide rate quotes. We do handle the whole U.S. If you guys got questions about things, whether it's mortgage rates itself or if you got questions about mortgage programs, the markets, please feel free to reach out. We're here to help. We can help you with the refinances as well as your purchases. So, again, I'm here to help out and assist any way possible. So without further ado, why don't we jump right into it? We'll start with the economic report. This week's pretty light for the most part. We don't got a lot of data out there today, but a little later today, 11 o'clock our time here on Pacific Standard Time, the Fed minutes would be released from the last meeting. So that would be probably the big report for the week, really. We don't have any really high impactful data out there. Something that comes out every Wednesday is this little report here. We don't usually mention it, but it is kind of interesting to note. It's from the MBA, which is the Mortgage Application Activity Report. And as you can just see, just glancing at, is that even though rates dropped, the purchase and refinance mortgage applications dropped last week. So let's go ahead and take a look at what's ahead here to the headline news. Stocks are a little mixed today. NASDAQ, surprisingly, is the only one in negative territory, and I'll tell you why coming up ahead. Uh, yeah, NASDAQ's actually the only one in negative territory right now. The others are just barely above. A lot of this is the pullback is from this report that came out from the BLS or Bureau of Labor Statistics about the 9.2 million job openings for May. This is so basically it's not so much about the jobs is trying to get people out there into these jobs. So we see all these big, huge amount of job openings out there, but and this is part of the reason why we have the supply chain. We don't have enough people to help manufacture the goods, and then also on the service side to even try to sell those goods. So this is kind of what's creating a drag on the economy, and investors are kind of looking at this that maybe we are a little bit further away than they initially thought. So for the most part, they're kind of pulling back a little bit on their stocks and stock positions. So let's take a look at what's going on with mortgage rates. Mortgage rates are up 6 basis points. So not enough to make a difference in pricing. So as you saw here, we were kind of in this range as well. We did pull back down, ended up closing up 22 basis points versus being up 28 basis points. So we're in about the same range as we were yesterday, and so pricing will remain unchanged at this point. So we're still seeing this nice little trend here for mortgage-backed securities going upwards, which helps with the mortgage rates. So when mortgage rates go up, as you see these MBS goes up, that means rates are coming down. And you'll see that here with the 10-year Treasury. We were actually down at 3.1 at one point. Right now we're just sitting at 3.2, so it's pulled back a little bit too. But as you can see here, we're having some pretty steep drops in yields. Now to touch on that NASDAQ comment was that usually when the yields were rising, that's when Nasdaq was having the problems because of growth stocks, and that meant basically they're paying higher in their debt. So they have a lot of these high growth stocks have debt, and when their debt is rising, that means less profits. Now that it's coming, you would think that would be kind of the inverse, but however, today it's not doing that. So just give you a heads up on there. So again, mortgage rates remain unchanged from yesterday's pricing, and looks like otherwise we're trending quite well here, if you can see this. I did hear one person say maybe could even drop the Treasury, maybe drop back down to 1%. So that remains to be seen. But however, this is good news for those who are looking to buy with the lower rates, those who need to refinance or want to refinance, get in with catch the wave of lower rates again. All right, folks. Again, if you guys got questions about anything, please feel free to reach out. If you like these videos, please hit that smash that like button. It certainly helps our channel out. We greatly appreciate you guys watching, and we'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye bye.